All right, everybody, I'd like to introduce our next keynote presentation here at the Planet MicroCap Showcase Vancouver. Up next is Seth Forman from Socialsuite. Seth, take it away.
All right, thanks, Bobby. Great to be here. Hey, everybody. We got a big crowd. Hopefully we got a big crowd online, which is great. Yeah, my name, again, Seth Forman. I'm the president at Socialsuite. So today we're going to be going through a few items. A quick overview of ESG, particularly those who may not be too familiar with what ESG is and why it's important. We're going to talk about the impact and why investors look at ESG and why it continues to become more and more important to them. And then finally, we're going to be talking about how you can start your ESG journey for those that haven't started yet. All right, so what is ESG? We're going to start with a quick story. So what does the Panama Canal have to do with ESG? So right now, today, in the Panama Canal, on both sides, there's hundreds of ships that are out idling, waiting to go through the Panama Canal. This is a very recent turn of events that have occurred there. And this is not because of poor planning on the part of the Panama Canal. This is all because of environmental risks. It's because of severe drought that's occurred in Panama. The Panama Canal requires a significant amount of fresh water for ships to go into the locking mechanisms so that the ships can go up and down. And because there's not enough water because of the drought, the Panama Canal cannot pass enough ships through. This has created just recently, a major problem for any ships trying to go through. And that's why there's all these ships there. Now, from a financial standpoint, what's happened is that you're now seeing companies that had plans to have their goods pass through. Those goods, the shipping costs have now gone up by 3 to 4x. The time to deliver the products to the customers has now been delayed by months. This has become a material issue for these companies. And most of all, for the multinational companies, the big companies, they're okay because they've planned for this in advance. They've actually set their schedule a year in advance. They can pay for this issue. It's really impacting the mid caps, small caps, microcap, and private companies that have to do more last minute transportation. And they're really getting impacted by this. It's an ESG issue. This is part of the E, the environment, where companies that have identified that the environmental risks related to drought and related to the Panama Canal through ESG efforts can plan for this, can then come up with an action plan and then mitigate those risks for the future. So it's a good example of, I get a lot of questions about, what is ESG, why it's important. There's a lot of confusion about it. This is an example of where ESG and planning around ESG can really help companies identify a risk like this and then plan for it. So when you think about the ES and the G, environment are risks related to things like drought and things like other climate change issues related to water, or it could be related to waste. So it's really identifying a number of environmental issues. On the social side, these are different metrics related to people, diversity, things like local communities. We'll talk about that. And then on the governance side, things like your purpose statement and policies like anti-corruption and policies such as anti-harassment. Most recently in Canada, recently passed a ruling that companies do need to have policies related to anti-slavery, child labor practices. All of this combined is related to ESG. So why does ESG matter to investors? And so there's a quote here from Doug Silver: ESG is the business ecosystem framework that has become a major focus for investors. And it's becoming more and more important because investors want to understand risks that go beyond the financial risks, but also non-financial risks. And so what we have here is that across the board, you have institutional investors that are increasingly deploying and creating their own methodologies so that they can actually assess the risk of companies, ESG risks of companies. Retail, we'll talk about that in a minute, is also becoming a more important factor from an ESG standpoint, and then you have a number of different ESG funds. So when you look at the broader picture of ESG from an assets under management standpoint is increasing, significantly increasing. It's somewhere around $20 trillion of assets under management today or have some sort of ESG related metrics towards it. And this is going to be increasing well into the hundreds of trillions of dollars in the course of the coming years and decades. So it's a massive, massive amount of capital in the markets related to ESG. And then when you look at today, in terms of an aggregate level of total assets under management, what % of it is ESG related? It's about just over 20%. So about 1/5 of all assets under management today in 2023 have some sort of, again, ESG related factors. So it's quite a substantial portion of the assets under management. Now on the retail side, retail investors, what we're finding, and we have a lot of research around this, is that retail investors, particularly the next generation of investors, between the ages of about 18 to 40, are coming in and seeing, when they think about climate change, it's becoming more of a personal and a preference of asking themselves, what can I do with my money to impact the climate, to impact climate change, and try to make sure that there is a world that my children and my family is going to have that can do things to mitigate risks related to climate change. And so we're seeing a lot of retail investors, those younger retail investors, even go as far to say, I am okay with underperforming in the market so long as the companies that I am investing into have sustainable impact ESG credentials attached to them. So from a retail standpoint, and this is research from the Wall Street Journal, where 80% of that younger generation are saying, hey, I want to invest in these kind of companies. There's a lot of research that's showing this. So what does that matter for the issuers out there? Really thinking about if you're trying to access a new set of retail investors, particularly a younger generation of retail investors, you should be thinking about ESG. You should be thinking about sustainability. And then a quote here from Erica Barbosa, who's with Second Muse Capital. She said again, for most retail investors, ESG investing is a natural fit. A recent survey from Friedman Foundation found that almost 60% of retail investors desire to align their finances with their values and view investing as an opportunity to make a positive change in the world. So again, it's more. And there's a lot more research that we have at Socialsuite showing how that next generation of retail investors deeply care about this. So we talked about investors. I also want to talk about two other stakeholders that we're seeing are becoming more important as it relates to ESG. One of them is customers. So multinational companies are starting to deploy quite comprehensive supply chain efforts to push and influence their supply chains to have ESG-driven credentials related to climate, related to social items, and they're even giving preference around it. So like Marriott Hotels just launched a new ESG program where they're going to give preference to the suppliers that meet certain thresholds in terms of their ability to reduce carbon emissions, to have certain policies. So we're seeing this, a lot of the automobile manufacturers are doing it. So how does that matter to microcaps and small caps? This is something that if you have a business and you sell your product up to larger companies, or you're looking to win business from these larger companies, this is a way that you could take advantage and be prepared because this is coming. We expect every multinational company is going to have these programs that are going to be driven and influenced to have their supply chains do more as it relates to ESG. The other areas around, particularly for your microcap resource companies or anyone that has local communities, there's an important dynamic as it relates to the social, the S side of ESG for those resource companies, because the local communities want to understand the company's policies and transparency around what they're doing as it relates to ESG. So we're seeing that as well. Finally, around compliance, the the quick update here is that in the U.S., the SEC is expected to pass a climate disclosure ruling. Right now, the final action of this is set for October 1st. And then the expectation is that the CSA out of Canada will follow suit with a similar type of policy and mandates related to climate disclosures for public companies. So this is important for every company to be watching. The other compliance side, as I mentioned earlier in Canada, is for certain size organizations, it is mandated to have certain governance policies related to anti-slavery and child labor. But we expect this to continue in terms of the compliance, and this is something to watch or at least start to prepare for. So we talked about why ESG is important to investors, why it's continuing to be important for customers, along with also from compliance reasons. So then the question is, well, how do you get started? So at Socialsuite, we've designed and we launched a platform to help mainly microcap and small cap companies get started on their ESG journey through a phased approach. And so we call it the 5 steps of maturity. And essentially, it's broken down the steps of ESG to help companies get started, start to report, to understand the policies that they already have. What's really interesting, a lot of public companies don't realize it, but they already have a lot of policies related to ESG. It's just not pulled together as part of an ESG report. We have things like materiality assessment, which is software to help companies identify the risks and opportunities that they have as it relates to ESG and plan around them, and ultimately helping companies report. So it's really what we find is ESG can be a really complex and quite an overwhelming set of initiatives to do. We've done everything possible to simplify it for companies that don't have chief sustainability officers, that don't have ESG expertise in-house, but help them get on that journey and help them get started through our different software and support teams. We provide a lot of different assets to companies, things like investor slides, microsites, reporting tools, again, to help them highlight and identify all these different ESG factors to their various different stakeholders. This is an example of an investor conference, one of our customers, Galan Lithium, highlighting their ESG credentials to the investors in the crowd. And this one was mainly retail investors as well. So Socialsuite, we've been around since 2016. The company today has over 100 public companies that we work with across 6 major exchanges. We are a Series A company, originally out of Australia, and I launched the North American business about 1.5 years ago, and we're continuing to grow and add new companies on board the company. One quick example of a success story is this is with Battery Mineral Resources, a Canadian junior resource company. They were looking to get started on their ESG journey, didn't know where to start. They were starting to get questions coming from their investors, and they came to Socialsuite, ran through our ESG program, and actually just recently published their inaugural ESG report, and they're now using it to help raise capital, to help really show investors that they're planning for a variety of different ESG issues and have plans around it. And again, it's that confidence layer that helps with investors to show that these companies are ahead of all these different ESG factors that are happening around the world. In terms of resources, so if you want to learn more about ESG or about how investors view ESG, we're hosting a webinar on September 12th. It's going to be with our Chief Impact Officer, an ESG investor called Change Finance out of Denver, and a impact investor that's based here in Vancouver. It's going to be a really good panel, so I would recommend those to sign up for that. That's on our website if you want to find the link to it. I also recently wrote an article for the Planet MicroCap magazine talking about a lot of the items I talked about today related to retail and institutional investors and how they view ESG. And then finally, I ran recently a CSE and Socialsuite ESG webinar. Again, going into a lot of the factors around ESG and why it's important. So that's a resource that's available on the CSE website, on YouTube, and also on our website as well. Thank you. So this is my contact information, my email. Again, I'm Seth Forman, president at Socialsuite. This is our web address, socialsuitehq.com, and also my email, seth@socialsuitehq.com. So happy to take any questions. How long does it take usually? Oh, money. So pricing wise, we have a number of different packages. We have starter packages for companies that are just getting started. We have reporting packages and more complete packages. Generally, you're finding that the investment to do this should be somewhere around at lowest price somewhere around $20,000 per year, and it could go up from there depending on what specifically the company is trying to achieve and what their goals are. But generally, that's the pricing for some of those starting packages. Yeah, so on the ESG rating front, there's a lot of different rating companies out there. It ranges from anywhere from an MSCI, which is probably the most well-known. They have an ESG rating business. There's Sustainalytics. There's Refinitiv. There's ISS. The proxy firm has a pretty sizable ESG rating business. S&P. So there's a lot of them out there. Right now, ratings are actually going through a bit of an evolution. There's a lot of scrutiny around the ratings. And there's a lot of distrust of the ratings because it can be quite subjective. And when you think about the scope of ESG, it's quite significant. So generally what we find is with the rating companies, it's important for companies to get rated because a lot of institutional investors do look at those ratings. What's more important, and through our research we're finding, is that the companies, the institutional investors, they don't really, frankly, trust the ratings themselves as much, but they want the ESG data. Because what a lot of the institutional investors will do is that they'll pull in the ESG data and the metrics, and then they use their own methodologies to create their own kind of ESG risk scores. So what does that mean for companies? One, again, it's important to get started if you haven't. Two, the report that you create and that data in the report is pulled in by a lot of companies, either from the ESG rating companies or from the investors themselves. They then take that data and put it to their own methodologies. And it's really important because the institutional investors, if you have no information and no report, you come up as effectively a 0 score in their own ratings, and you just get screened out of their funds. And we see this all the time. So at the minimum, to play in that market and to get access to a lot of the ESG institutional investor funds, you should have a report and start in continuing to improve and progress from that standpoint. It's effectively you get once they give you a score, but interestingly enough, S&P, and this was just happened about a month ago, they just pulled all their scores. So they're no longer doing like the numeric scores, but they're still going to be reviewing companies based on their data and giving more descriptive views of ESG, but they're no longer going to rate. And we expect this to continue. We believe a lot of the existing scoring companies are going to pull their like A, B, C, and 1, 2, 3 ratings and just focus on descriptions because it's just getting so much scrutiny right now. And again, it's hard. The quality of it is just completely across the board. If you look at 20 different scoring companies and they look at one company, you'll probably have 20 different scores all across the map. So as an investor, it's really hard to like trust that. No consistency. And that's what we see. So Socialsuite does not score. We don't believe in that. We focus more on the helping companies with the actual descriptions, disclosures, the reporting. We will help them improve scores if that's something they want and a goal, but we don't actually score. Sorry. Yeah. So we, on the environmental side, we help companies with their GHG emissions and help them actually calculate those emissions, scope 1, scope 2. We're starting to see more companies do scope 3 emissions. If companies, what we'll do is help them identify through ESG that a revenue opportunity for certain types of companies could be offsets and potentially selling some of those emissions for offset revenue. We use partners to help with that. But that for certain companies, we have one of our resource companies, Mimbos Resources, actually has a revenue channel now where they're able to use their carbon credits to actually make money. And so that's something that we help them identify, and then we have partners that actually execute on that. Yeah, so it's a good question. I would say it's depending on the size of the company. We find with microcap and small caps, generally it's the IR leader or the CFO that is handling the project owner. And then usually it's a team of like maybe 1 to 2 people within the company that helps go through the process. As you go in, and for the like mid caps, large caps, they'll have more task force folks from like HR and legal and a whole task force involved. And when you get up into the large caps, they'll have a chief sustainability officer, maybe a couple, like 4 or 5 people underneath the chief sustainability officer to handle the whole thing. And so generally that's what we see right now across the board. So, yeah. Any other questions? Right. Yeah, thanks. If you have any other questions, feel free to email me. Thank you for the time, and thanks to Planet MicroCap for being here.